So let's start at the beginning. For all the people out there that don't get it, I'm going to try to give it. For all the people that already know this stuff, go wash your car.
Welcome back, everybody, and if you're new, it's so great to see you. Come on in. I said this in an earlier video. I said I would make a video every weekday, and I'm not saying there's a connection, but every time I upload a video, Tesla stock keeps going up. So I made that video on January 8th. Tesla stock keeps climbing, so today's the 14th. We'll see what happens. Cathie Wood from Ark went on CNBC today to discuss the company's $6,000 price target and an upcoming model that they're going to roll out on GitHub. And in a previous video, I covered the current model that they have posted. I'll leave a link to that in the description.
Again, 4,000 by when?
Well, we are in print, actually. We don't even talk about this number. It's a 5-year time horizon.
Okay.
Originally 4,000, but when we did our next run at the model, we came out with 6,000. We've just completed another run. Stay tuned. It'll be on GitHub within a few weeks.
So as soon as they post that, I will get it out to you guys and go through it, analyze it, and let you know what I think. In my opinion, a lot of the value that they're deriving in their model is based on the autonomous vehicle assumptions. One interesting point I wanted to cover, and we brought this up briefly yesterday, these are GM's numbers from their 10K, but rough and tumble, the worldwide vehicle market is 90 to 100 million, and China accounts for 26.5 million of the global vehicle market. This is another reason, and we went into it a little bit today during a live stream, this is another reason that the momentum that Tesla has in China is causing the stock, in my opinion, to go on a little bit of a run here. Cathie also talks about how Tesla could receive SaaS, software as a service like margins, from their full self-driving vehicles. And there's a great article from Andreessen Horowitz, a venture capital firm, on understanding SaaS, and it really opened my eyes as to how people that live in this industry, that live and die in this industry, value SaaS companies.
You know, it's not, you don't have to be a genius.
I wanted to cover real estate quickly. So one channel that I really like is Life for Sale, Ben Mallah. I don't know if any of you have seen that, but he goes through some very simple math, basically talking about how he makes money in commercial real estate deals. And I wanted to just walk through it a little bit. So here's a chart of cap rates versus treasury yields. And whether you know a lot or a little about real estate, basically what you have to know is that the black line here is the risk-free rate. And the blue line is what you get before interest expense when you invest in a apartment building. So you can see that the spread between these two, and these are in percentage terms, kind of 8-6. I mean, the spread's been around, say, 2-ish, and it compressed in 06-07 when the market was very frothy, and then it blew out in 2009 when the real estate market collapsed and treasury yields declined. So here's the point. If you just take a quick look at how a commercial real estate investor can make money, let's say you have a small apartment building and you have one apartment, maybe two apartments, you're charging $2,000 a month in rent total, and you have $12,000 worth of expenses, so a 50% expense ratio, which is conservative. So that building would generate $12,000 of NOI every single year. The cap rate is what we just looked at, and it's basically, again, this line here, which represents the yield that an investor, a real estate investor, is willing to accept. This line is probably a little bit below 6, and I apologize for not having exact science behind this, but it's probably sub 6. So I put 5.5 in. Again, this is for multifamily. This gives you an implied property value of $218,000. For a commercial property, you might put down 20%, which makes your loan to value 80%. If you put down 20% on a $218,000 property,
The bank's going to cry, no.
that's $43,000 of investment dollars. And if your interest expense on that is $7,000 a year, which is, I'm just taking 4% of the $174,000 loan. This is interest only, so no amortization. Just interest only, cash on cash returns. But you're getting $5,000 of levered cash flow, which is an 11.5% return. So there's an article in the journal today talking about strip centers and how investors are treating them favorably compared to malls, indoor malls. And the basic thesis is that your local strip center has businesses that are insulated from Amazon-type competition.
I'm sure you know this. We have 24 square foot per person in the United States of retail space. China has 3. Germany has 2. I would call that being overstored.
Hairstylist, a gym, things like that. And these are exactly things that Ben Mallah has been talking about, which is why I thought it was good. And he's, I think, buying at probably a 7 cap. And he is paying 4%, which he claims, which seems really low to me.
I want it at interest only for at least 2 or 3 years at 4% interest.
I mean, let's even say it's 4.5% here. And he's doing bigger deals. You know, maybe he's collecting, I don't know, $1 million in rent. Even that was probably small for him. Oops, I just did 10 million. $1 million. Wow, let's see if I can get this right. And let's even say that his expenses are $500,000, which I don't think he would ever allow. Sorry, I'm very slow. If he's buying a strip center with $500,000 of NOI, that's a $7 million property. If he's putting down 20%, he's basically getting 17% on his money. Here's why it's relevant for public market investors. Here is a chart. Oops, I'm going to try to make it a chart. Here is a chart of Simon Property Group, which is sort of a tier 1 all operator, and Equity Residential Properties, which is Sam Zell's multifamily REIT. And the point is that the yield you can get as a private investor, if you're willing to roll up your sleeves and you find a really good deal, you can get bank financing and all of those things. The yields, even today in a compressed cap rate environment with low interest rates, is pretty strong. Let me know what you think about this. I'll put a link in the description. And I'll also include Cathie's interview on CNBC, the full thing. And a reminder, as soon as that GitHub model comes out, I will analyze it and push a video out to you guys.
Thanks for leaving a like and subscribing to my channel. I upload videos every single day. And that's it.